Good morning, everybody. Welcome back to Schwab Coaching for the Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner. A crisp, chilly 1 degree morning here in Denver, Colorado, but nonetheless, I am pleased to be here and pleased to be joined by my friend and fellow Schwab coach, Brent Moores. Good morning, Brent. Not as chilly out there in Utah today, huh?
No. I've always kind of just assumed we have similar weather, but the last couple of weeks, Kevin, you've proven me otherwise. We're not that cold here. So, but it's good to be here. I'm a little jealous, Kevin, because each day, pretty much, you get to start off your day with Trader Talks, and for me, it's just once a week. So this is always the highlight of my starting my day off here is this class with you.
I'm glad to hear that. You're right. I feel pretty lucky. The opportunity to start each day by talking about the market is a fun one. It's a great way to kick my day off. Tuesdays now become a little odd for me in the sense that I don't get to host off the morning. So I get to watch, get to pay attention and see what's happening and whatnot. But nonetheless, on a Wednesday, we love getting to communicate with all of you. So we'll see a lot of names we recognize, obviously, here in the chat. For those of you that are in the chat, say hi to our friend Cameron May. He, of course, is going to manage things for us there. And Brent and I will do the same. We'll try to bring your comments and questions into our discussion as we often do here in Trader Talk. So feel free to post there for the duration of the segment. Remember, you can follow us all on X. Cameron May CS, Brent Moore CS, and Kevin Horner CS. We try to post for you there throughout the week, give you some things to keep in mind, maybe some intriguing charts that might come up to you. That's one of the things that I like to post are charts that are making the kind of making headlines, if you will. I try to make posts there that'll maybe bring some things to your attention, give you some things to pay attention to. Now, beyond that, if you're not already doing so, we'd love your follow here on the Schwab YouTube coaching channel as well. Make sure you're subscribed there. Goes a long way towards helping us out, but also gives you access, of course, every day to the multitude of hours of live content from us. As always, we want to review some disclosures and then we'll get into our discussion with you all. Please keep in mind that the conversation here is exclusively informational and educational. We do not make recommendations nor endorsements for a particular approach or strategy to trading the market. We talk quite a bit of technical analysis here, though. It's important to keep in mind that technical analysis should be considered a complementary viewpoint to your fundamental research. What we mean by that is simply don't make decisions exclusively off technicals. We think they are just a puzzle piece in your broader picture. All right, and in terms of our agenda, if you're new here, this is what we strive for. We start broadly with that top-down view of the market. We'll hit up the major indices. We'll then move into sectors and industry groups within the broad market, maybe some individual equities that are in the news today as well. So plenty to get to in a quick 40-minute discussion, so let's jump right on in. Brent, we're looking at the SPX at the start here. We have been dawdling above that 50-day moving average, and yesterday at the close, we did get a new closing high, which we can take to be a little bit bullish, I suppose, in the short run, but it really didn't come with a whole lot of conviction yesterday, did it?
No, it didn't. And, a lot of times when we're looking at a breakout, say, are we breaking new highs, or you could say the same thing when we're breaking new lows. The question is, how much do we need to kind of break it above to be convincing? And I'm not convinced that we cleared it clearly, I guess. I mean, sometimes we'll talk about, well, we need to be above it for 2-3 days or something like that, or we need to be above it by a certain amount. Well, we'll see. I mean, I think the jury's out on this one here, but it's not bearish by any means. It's, we had a nice candle yesterday, but it is just not a convincing breakout in my mind. Having said that, the general trend has been up. We're above our moving averages, including that 20-day moving average, and we've had higher lows. In fact, you could even probably draw a diagonal line across the lows starting from early January to right there, and you can kind of see that. And in fact, we have kind of a horizontal line there, and that, my friends, is an ascending triangle, which is kind of generally presumptively kind of a bullish pattern, but waiting for the breakout. Well, again, we're kind of a little iffy on that breakout at this point. So we'll see, but that's the pattern of the markets right now. So all in all, I mean, even though I sound a little bit like a naysayer of yesterday's candle, I would say it's a fairly bullish pattern we have here.
Yeah, I think so as well. We often fall back, I think, Brent, on the idea that we can just take some pretty basic technical analysis approach here. I loved your call out, obviously, from the January lows, higher lows along the way, matching highs along the way, ascending triangle, typically not a bearish indication. Are we getting a little tired? Are we waiting for the breakout? Would we as bulls want that breakout imminently? Of course. We could even take optimism from yesterday's action, Brent, because that's a pretty lengthy tail in the way of selling in the morning that got bought up, meaning that the bears really tried to control the day and give us a shorter term close below the low we had on Friday, which, you know, as we look at this a little more closely, you had an indecision doji there on Friday. And then yesterday, bears tried to break it down and couldn't do it. So some bullish traders would tell you, Brent, that they weathered a storm to a certain extent with yesterday's price action.
Yeah, and I mean, as long as we can stay right where we're at today, I mean, it's no, it's not a breakout, but it's also not a breakdown either. And so, you know, we'll see on that, Kevin. But I would say, yeah, I mean, yesterday's candle was relatively bullish. It's just not a definitive breakout.
And so this, of course, Brent, becomes the point where I have to mention, as always, we traders need to know what steps we want to take if things change, or how we're going to handle a new high close on the SPX, or maybe how we would handle a breakdown on the SPX. Where will we make those decisions? Some of you short-term traders might look at yesterday's low. Some of you might prefer the 20-day. Some of you might prefer the uptrend line. And even still, some of you might prefer the 50-day moving average. All I'm suggesting is know which of these levels matter to you. Maybe not any of those, perhaps, but where it is where you would take action. Where would you lighten up a little bit on your SPX long positions? Where would you get a little more defensive, be willing to build cash, etc.? Give yourself a plan, give yourself that playbook so that you have something to refer back to, and then you can make decisions quickly in the moment and do so confidently. I'm a big believer that laying out that framework for yourself is a key to your long-term trading success. So have a plan and try to stick with it, everybody. All right, let's check out the NASDAQ 100. We're about flat, 0.1. But Brent, some good moves in here. We busted out of a little bit of a triangle, it looks like. And yet we did not, let me see. Actually, we did get a new, I'm going to put the bubbles back on here. I try to keep those off for cleanliness. But yeah, we got a high close there, just our new intraday high there yesterday, didn't we? So difficult to call this bearish as well, isn't it, Brent?
Yeah, I mean, a lot of the comments we gave on the S&P 500, you could probably give on the NASDAQ as well. But it is, we've had a relatively bullish run. I mean, if you just look, sometimes you just got to step back and see the forest for the trees here, because like, look at this chart. Look at the start of the chart and look at the end of the chart, and it's basically this line from left to right. You could do a linear regression, whatever you want to do. It's a nice trend up that we've had, and I don't see any sign that that's changing right now. And you know, it's at some point it could, but it would have to actually fall quite a ways to actually break below your support line there on that, Kevin, that you just drew. But the point is, sometimes when we look at intraday action, we can kind of scrutinize that one candle and go, oh, I don't know if it's doing this or we're breaking out or what. But the longer you look, the better it looks.
It's really hard to dislike it, isn't it, Brent?
Yeah.
I mean, that's a new high. We say that all the time. We know new highs are not bearish, generally speaking. And it looks like we're kind of posting up a bit of a flag over the last 3 sessions, which again remains bullish because why? Well, we're not breaking down after the move higher. We're actually holding a short-term level. In fact, again, zoomed in to the recent action, you'll see yesterday, that's a hammer candle at the top of a range. I mean, at a new high. That's very difficult to do. generally speaking, Brent. That's uncommon, isn't it?
That is uncommon. And again, like, so admittedly, the day is young today so far, so I don't know where we're going to end up the day, but for a pullback, for a flag, so far, well, I guess if you're a bull and you're getting a flag, what you don't want to see is pull way back. And in this case, it's off to a good start, at least in terms of not pulling way back. It's more these sideways, kind of more of a rest than a retreat is what we're looking for.
Yeah. Do you think, Brent, that that's one of the harder things to manage as a newer trader or trader who's still figuring things out? It's difficult when you make these highs and you see things just kind of meander sideways. The tendency is to say, well, the buying is not as enthusiastic and we haven't gone anywhere. But the reality is you're holding a new price range. That matters to a lot of traders, doesn't it? And that really dictates, I mean, that tells us quite a bit about the price action, doesn't it?
Yeah.
Oh, I think I may have lost Brent, or I may have lost my own earpiece. We're going to find out here momentarily, everybody. So what I was suggesting is how difficult it can be when we get up
in
to
some
levels.
sense. The difference is how big is it really going to pull back a long ways, or is it going to just kind of rest? And in our case, resting is a good thing, I guess, is what you want to see.
Exactly. That's hard to recognize, I think, initially. But yeah, a rest in here is not a negative as we kind of tend to lean into. I think that's the human nature of things, is to think that a pause is negative, but in fact, it's just allowing this new recent move to get digested, I think, is what we ultimately might be thinking in here. So, all right, so we got some levels to pay attention to. I think a lot of what I said about the SPX, Brent, holds in terms of the levels, right? We could talk about the downtrend line that might provide support. That'll be close to the 20-day. You've also got the uptrend line, the 50-day, and then whether you choose to like the long-range uptrend that's been in place or not. Obviously, that's at all of our own discretion. So know your levels, where you'd like to go, where you'd like to manage things, everybody. Let's see how small caps are handling today. We've got a bit more selling here, Brent. We're off better than 0.5%. And as I zoom back out, man, that 50-day and now the confluence at the 20-day as well. Both of those moving averages right on top of one another, overhanging this move in the Russell. It's not really a great look in this pattern, is it? Oh, Brent, do I have you on mute?
Sorry, guys. Sorry, I didn't realize I was muted there. So I had a little tech issue, I guess, and sometimes it looks different on my end than your end, so I didn't realize I was muted there. But in terms of the Russell, yeah, I mean, just look at the difference in the chart. Think back to that NASDAQ chart we saw where it was just straight up from left to right. Well, this is obviously very different. We're kind of in this new channel with this new trading range here, I guess I would say. And you have your kind of resistance and support laid out there. And we're just kind of hanging out. And either from a bullish or bearish standpoint, it doesn't seem, I don't have a whole lot of conviction either way on that. But because it seems like that channel is a pretty good sideways channel we have right now.
I think so too, and really, Brent, when you're looking at the fact that that's where we've resided for this long, there's really not a lot of necessity to force a position in here.
Yes.
We're at a spot that could be resistance. We could drift down to the green line. We could break out to the red line. But in reality, Brent, I think a lot of traders would just say, don't do anything until one of those levels is violated. Right? Red to the upside is a bullish opportunity, and green to the downside is a bearish opportunity. So you have to take out one of those two levels to know directionally which move is on deck, really, right?
Yeah, and you have this whole universe of trading opportunities out there, and if you're not confident, maybe you are on the Russell, I don't know, but if you're not confident on any one, then look for a better, using the baseball analogy, wait for the better pitch. It's not three strikes and you're out. If you're waiting, you can wait on pitch after pitch, and if it's not down the center of the plate, hold on, wait a little bit.
I can't believe I've never really even brought that to the table. As a big baseball fan, Brent, that is a wonderful analogy. Just waiting for the proper pitch instead of choosing to just go up there and swing willy-nilly. We got a lot of, I know baseball these days is really built on just taking your hacks, and it's a lot of home runs or strikeouts instead of a lot of singles and doubles as it used to be back in the day. But nonetheless, the idea holds true. Waiting for your pitch, not being too aggressive, not taking every trade that comes across your monitor, and recognizing that not every trade is really one that needs to be made. I think it's an excellent point that we can fall prey to really easily. If you get yourself in the mindset of being a trader, you can find yourself just making trades out of habit instead of out of discipline. And certainly we would encourage the latter rather than the former. We prefer you to be doing so from a disciplined approach and standpoint. It makes a lot more sense.
Yeah, and let me just mention one thing in the chat. Chris mentioned it. It's a good point. He said, what about neutral income strategies? Absolutely, and I think that you may have a whole portfolio, and you may have different aspects of a particular portfolio, and we're not really going to get into neutral income strategies in this class here today, but here's your shameless plug. I do teach an advanced options class on Fridays, a webcast on Fridays. You may, where we talk about dealing with these type stocks that are kind of going sideways quite frequently in that class. So yeah, not a bad call out there, Chris, but for the most part, in terms of the average trader trading stocks here that we're addressing to, usually we're looking for more of a definitive directional strategy here.
Yep. And I just had to love the call out, first of all. We agree. We'd love to be able to get to a more detailed conversation around that. But don't forget, everybody, the site to check out is the coaching page here with our calendar, which is excellent for you. Don't forget, you can base this on individual coach, or you can base it on searching for a particular topic. If you wanted to just look at options generically, you could do so and pull up the coming events that we've got for you here today. So you've got index options. There's Brent managing an options portfolio later in the day. So there's all kinds of great content here for you. I'm sorry we don't have the opportunity to dive into the neutral strategies, but it's an excellent point that when market volatility is leaving and you're going sideways in price action, it becomes opportunity for some traders just looking to take advantage of neutral option strategies. It's one of the reasons traders enjoy working with options is regardless of the market you're in, you can find a proper strategy to trade for it. So good reminder. Thanks for bringing it up. I'm glad we could get to that today, Chris, and certainly bringing up, of course, the reminder of the website there. Great spot to bookmark, everybody. Brent, let's get off of our major indices. Let's check out what's happening with the semiconductors. We've been struggling with that. Now, we've made a move in the last 3 to 4 sessions that has been significant. Significant because we had been struggling here at this confluence of data, right around 5,100 on the indice, Brent. But in the last 2-3 sessions, we have finally cleared it. It's just getting a little bit healthier in the short run, but we're really not seeing a lot of shift to the trend here recently, are we?
Yeah, I mean, when you're looking at stocks, you have to think, and doing technical analysis, you have to think about what's the trend, what's the momentum, but also support and resistance are a big factor there. So we do have kind of a pretty big ceiling overhead of us right now. So if you were looking to get in, you got to think, well, maybe there's a chance that we could maybe not bust straight through the potential ceiling there on that without some bit of hindrance. I don't know for sure. It certainly may do that, but I think that's how a lot of traders would consider that. So good short-term strength, which is better than, if you're bull, better than no short-term strength, but it is limited in what it says here for us.
Yeah, it could be. The big gap zone in here, I think that red spot, that red line at around 53.30, 53.35 represents an area for a potential pause. You can, now that we have kind of worked our way through the moving averages, a little bit of a continuation move here today. But like I said, you fill that gap and then it becomes a wait and see. Do we then move ourselves to the top of the range, the highest we've seen from the indice here in the last few months, which is going to be that 55.25 zone right there. So we've got some work to do, but I think the reminder here is just that Yeah, we've really not gone anywhere with this pattern for quite a while. We've been sideways and really void of a true uptrend. If we back this out to the weekly, I think we can see that there's a, I'm going to clear the set here just to give us a better visual. You can see that it's just been sideways, man. So we had a wonderful, explosive uptrend, and we've just been in the midst of digesting it for the last few months here. So we'd really like to clear that 5,400 area for obvious reasons. But Brent, we have to pay attention to that nice, gentle, upsloping 100-week moving average. That really could present as an area for any aggressive selling to maybe come to an end down here. But we're a ways off from seeing anything like that.
Yeah, I mean, and when you zoom out to this 5-year, you can see we're bullish. And obviously there was a lot of, I can't think of the word. The word that's coming to mind is hype, but hype has some negative connotations to it, which I'm not intending here. But about semiconductors, it's a big, technology for the future. But there's a big, it's just a changing, evolving industry, and we may have gotten a little bit ahead of ourselves. When you go to the latter part of last year, there was a lot of talk on, NVIDIA and AI and whatnot, how that's going to affect. But then you kind of get, you kind of get ahead of yourself, and you go, well, wait a second. There's some complexity to this. It's not always just going to go straight up, and we're kind of digesting that right now, and maybe that changes. Maybe we've gone back to a little better valuations, and we're taking more realistic approach perhaps with semiconductors right now than we were in the latter part of last year.
Well, it certainly doesn't feel very hype-ish all of a sudden, does it?
Yes.
Because any positivity associated with the group has really been kind of sold. Even the enthusiastic rally we had here in early to mid to late January got sold, obviously. So we're not seeing that consistent buying in the space that is holding it up aggressively here. The reminder is, we're looking at the indices here, the Philly Semiconductor Index, which is going to be, of course, the entirety of that industry group. Whereas, looking at something like the multitude of various ETFs that offer exposure to that space are going to be they're going to move based on the allocation of dollars in those funds. We talk about that a lot more on Fridays, everybody. So be with us live on Fridays, because those are non-archived sessions. Brent, any more that you want to add as it relates to the semis, or is there a space you'd like to look at next on our hit parade, so to speak?
No, I mean, I think it's good to take a look at different time frames, and this chart looks very different than the long-term chart, and that's why you look at different charts here, folks.
Yeah.
Zoom out, zoom in, and it can give you a little different perspective.
That's key, isn't it? Just various levels of perspective are absolutely important. Some of the things we've seen moving outside of the traditional broad market, Brent, let's look at energy. Is making a pretty strong pop today, 1.2%.
Yeah.
Again, this is a space that has been kind of difficult to figure out. Chop would be a proper word when you look at this pattern. Wouldn't you agree?
Yeah, that seems to be a theme that we've been talking about a little bit today, that it is, some strength short term, but we do have some resistance levels that will likely hit, and a lot of volatility up and down. And, I don't know all the reasons. Obviously, there's some geopolitical reasons that can certainly affect this as well. But energy as a whole, a lot of times when I think of energy, and there's a lot of components to energy, but I think of, a lot of times my mind turns to oil
Sure.
when I think of that. And you can see here's crude oil, and again, we've had a little bit of a rally the last couple of days in crude oil, but there's resistance, and there's not much that, there's the short term may not turn into a trend going up. What it's going to take is some more macroeconomic factors that are probably going to drive it higher. Remember, whenever you're talking about oil or energy in general, there's two sides of the equation. There's the supply side of the equation, and there's the demand side of the equation. And there are certainly, I guess, more concerns on the demand side of the equation in terms of global economy that are probably affecting this than anything right now.
Yeah, and of course, there's some supply disruption, some conversation around Russia and Ukraine, the potential for peace talks. We'll see how that plays out. Obviously, impact on oil is going to have a big impact on energy from a collective viewpoint. So please, at least keep these things in mind. Now, if we move off of oil, we could look at something like materials, metals. I want to look at gold in particular here just to check on something. So materials has rallied pretty well as a collective group. But Brent, we found ourselves here at the 200-day moving average just yesterday. From a technical standpoint, just talking about something that was working really well, where we had a long run. Let's go to 2 years on this chart, just to indicate the consistency of the materials group over the 200-day moving average. We go back to November of 23 until it broke here in December of 24. The fact that we've rallied into the 200-day is, that's a great bounce back, but at the same time, that's a pretty important level, isn't it?
Well, we want to see it break that, but in the shorter term, let's say the last few weeks, we have had a nice rally and a nice little consolidation. We had this little channel. We broke above that. And so even if we consolidate here a little bit, that's a good thing, as long as we don't, what we don't want to see is we don't want it really to retrace back into that old pattern of in the channel that we were in there. And so that's what we like to see there on this. And so, we still need to break. We don't want to stall out at the 200 for a long period of time. But I'll take the progress we've had for in 2025 so far on this.
Sure. Yeah, but if we're talking about it from a standpoint of, again, trade management. Hey, you're the trader who bought when we broke the 20-day. Terrific.
Yep.
Then the 200-day might become an area where you would look to take some profits. You haven't visited it in months. Like I said, we broke down in December. We are back to it. That becomes, first test is commonly the one that some bulls would sell into there, see how it goes. If you get above it and you clear it for any period of time, maybe 2 or 3 consecutive closes over the 200-day, then maybe traders load back positions they took off at the 200-day. They might then say, I'm feeling a little more confident. We've recaptured it. We've held it. But these moves, you know what? We have to define how we're going to manage them. And when you make it to a level that you said, here's what I'm going to do, my encouragement to you is just follow through and do what you said you were going to do.
Yeah, and we may see that. We're kind of seeing that today, maybe, perhaps. We have a little bit of a sell-off here. And you mentioned gold there, Kevin. Why don't we take a look at gold as well? Because it's had a great rally, another all-time high not long ago, and we're kind of flirting with that today. So, just strength after strength on gold. I don't know when that's going to end, but it's kind of taken this. I want to compare it to another one in a sec. I'll let you give any comments you have on gold here, but there's something I want to compare gold to in just one sec.
Sure. I'm going to leave. I didn't expect to see the Fibonacci retracement on here, but I'm going to speak to it because it seems like it's worked out well, Brent. Which is just using the move we had the opportunity for, which was the peak to the trough. And if you break the peak, where can the rally go? Well, it often will go to potentially the first extension level, the 161.8 extension. And look at what the high tagged. It missed it by 4 points on my drawing, Brent. Ultimately, that looks like an achieved or matched measured move at this point. Some traders who maybe took a position may have decided to, hey, that's about the extent of the move there. I don't know if that's the extent of the move, to be honest, Brent. There's so many additional factors at play here. The price continues to rise. It's really hard to speak negatively on what you're getting out of the chart. Technically, that's about as bullish an uptrend as you're going to find.
Yeah, it is, and that's a way of finding a potential kind of target, so to speak, when you're trading. I did this whole class on yesterday on webcast on finding targets, and if for some reason it didn't occur to me to use a Fibonacci extension to show a way of finding a target level, which you did perfectly there. And so, it doesn't mean that it's going to stop here necessarily, but it has been a pretty good rally on that. Now, what I wanted to compare this to was another thing that was strong, but actually is now faded, and that is Bitcoin. Because what we see is Bitcoin, obviously it's been in the news, but look at Bitcoin over the last 2-3 weeks. It's tailed off. It was at its high, all-time high there. I'm not sure when it was earlier right in there.
That's
but
the 21st.
Yeah, look at that performance since then. So they're both kind of, I guess, alternative assets to being just in equity markets. I don't know the exact reason. I would say maybe some people view gold as more of a store of value. There was quite a bit of, I'm going to use that word again, hype, I guess, with the new administration about certain possibilities about the crypto space. And you saw there it rallied fairly well, but at this point, maybe it's not going it's not going exactly where the crypto enthusiasts would hope it to go. Not that it's terrible, but it's just taking a different course than gold here on this.
Yeah, I agree. It seems like the safe haven trade, so to speak, might be a little bit more associated with what's happening with gold, precious metal side, gold, maybe even silver. But you're right. The movement along here, particularly this last 2 weeks below the 50-day moving average, does stand out a little bit, doesn't it? So that bears watching. Do have some support down here at around 92. But the fact is, it's gone more sideways than anything for the better part of the last 3 months. And you got to make note of that. It might just be a digestion window, which would be perfectly appropriate after a wonderful breakout in this instance. You had a pretty good range there, up to 74,000, as low as about 53,000. So it broke out of a 20,000 point range and made its measured move and then some. So we could still be in just calling this overall digestion mode more than anything else. So I tend to lean in when I look at Bitcoin. I just kind of think of it as more of a what is the overall feel of the market? Is it risk on? In a risk on scenario, tends to lean toward Bitcoin performing better and maybe more hyped, more aggressively. When it's more risk off, Brent, we see Bitcoin kind of going sideways and undergoing these consolidation periods, don't we?
Yeah, absolutely. So it would be trouble from a technical standpoint if we do break down below our support level, which is around 90,000 or so. Just above.
90, 92, somewhere in there. The other last thing from a macro standpoint that makes sense to peek on here, Brent, would probably be the dollar. The US dollar has been pulling back, and I think it's given the broader market some lift. But we are at a pretty interesting spot here because a brief bounce could be a little bit challenging for the broader market, Brent, but the overall trend of the dollar appears to be breaking down here.
Yeah, it looks a little bit bear flaggy to me there, Kevin, on that one, because we've had lower highs, lower lows on this, and I know some, this can benefit some portions of the economy to have that lower dollars, particularly multinational. Some of these large companies in the U.S. Probably would welcome a weaker dollar there. But from a technical standpoint, we're seeing lower highs, lower lows, little bit of a retracement right now. But I think a lot of traders would consider this to be maybe more of a short-lived rally. Time will tell, I guess.
Yeah, that's what that confluence there, the 20 and the 50 might mean, right? We've got a 20 crossing the 50 to the downside. That tells us trend is slowing in the speedier window, the 20-day moving average, and that could be resistance. You notice, look, we have been below the 20 on a closing basis back to January 21st, so almost a full month here, Brent, below the 20-day, and we've tried to get through it. Look at that. That dollar was really strong on February 3rd and sold off, and so there's been some bearishness associated with the dollar of late. That's the recent trend. Got to make note of it.
And you could extend that kind of green line you had there, which was an old support level. Well, originally a resistance level, old support. It bounced off it again after you had drawn that line probably. And now that is a potential resistance along with those moving averages there. So it'd represent a pretty good change in this if we were to break above that as well as our moving averages there. But I think from most technical traders would think of that as a less likely scenario in the short term.
Less likely, yes. As always, that's what we talk about, right? Probabilities, just maybe positioning one way versus another, and then using those probabilities to aid you in, getting a little bit more aggressive or getting more defensive, et cetera. Those decisions are each of ours, of course, independently. Brent, anything else that you'd like to get to broadly here when you're looking around at how the market is acting today? We've got red across all major indices, a few sectors that are in the green. Anything else you'd like to hit up maybe before we hit to some stocks in the news?
Well, I was thinking, something that you brought up is just the woes of home construction there. I was thought maybe we could, I like to bring the sectors that are like really looking strong, and this is not one of them. But I think it's notable just how far and how much it is struggling, and a break below a pretty significant support level there on this.
Yeah, that stands out. So new home construction struggling collectively here with that move. The question becomes, is this today that weak open, is that kind of a flush out move finally for a space that's been under so much pressure? If we look at how much pressure we're talking about, just to the last trade, according to my line, we are off of almost 30%, nearly 29 right now to the last trade today. So it's been a rough go of things. Brent, we're going to have to see rates come down, I would imagine, as part of this, right? I mean, the fact that rates continue to stay elevated has got to have a play on this.
I think it certainly affects that. But I don't know that rates are coming down anytime soon, Kevin. I'm not sure on that. And at some point, just demand of housing, I would think that by necessity there'd be some rally in it. But so far, it can wait it out. It seems like so. I think it's got to be rate sensitive there on that. And here are the rates. You can see, what are we doing on rates? We're kind of in a sideways pattern, I guess I would say right now on rates.
Yeah. I mean, I think I'll have to redraw my line here, because what happened, this looked to me like we broke down of like a neckline from a head and shoulder top. But if that's bounce, I mean, it happened to be bouncing really quickly. I mean, we were 3 days below the 50-day and then right back up above it. We're still clearly trying to figure things out, but rates are definitely playing a little bit of havoc on things. But it's not just a rate story as it relates, I think, Brent, to what's maybe happening here in the home builder space. Collectively, it's got to have something to do beyond just rates, I would suggest. I mean, it's going to be a very broad discussion around a combination of rates and supply, and maybe inflation also playing a heavy key, because unfortunately, if inflation stays elevated, the home building space, the cost of shelter continues to stay elevated too. It's a difficult process, to say the least.
Yeah, in fact, I'm trying to remember, I retweeted something here in the last day on just how expensive housing is relative to history. And it's it's onerous for a lot of, it's daunting really for people who are looking to buy, especially their first home right now. And it's more than just rates. Obviously, rates are a factor in that, but home prices are a factor. General economic, what people's perspectives or perceptions of their economic future and well-being play into whether they are willing to put down a large amount of money to buy a house. And so all that factors in there. So we'll see.
seemingly larger these days than it's been previously. That's for sure.
Yeah.
Requires quite a bit more in the pocketbook there. Brent, let's hit up some stocks that are in the news today. I had a couple of upgrades, one of which was Travelers Group, TRV. Let me get the proper symbol in there for you, everybody. There you are. So Travelers is in a bit of an uptrend. Brent working against that 200-day moving average, a little bit weak of late from the highs achieved here in fall and winter, but ultimately they were upgraded by Keith Brayette to outperform. Previously had been at market perform. New target here at 286, which is up from their prior target of 275. The 2024 the company Travelers Company 2024 reserve development largely compromised significant workers' compensations, personal lines, fidelity, and surety releases. According to the research note, the firm believes that their review points are going to be boosting its earnings outlook for Travelers moving forward. So what I find intriguing, Brent, you got a little bit of a move today, but not much. It doesn't seem to be the type of upgrade that the market was waiting for here, because we're not exactly breaking out on this upgrade.
Yeah, not overwhelming. I mean, you can take solace. We're above that 200-day moving average longer term, but we have had kind of a sideways. I mean, we're basically where we were in probably September at this point. So it's a slow move. This is insurance is a more interest rate sensitive industry, and so that could certainly affect it to the future course of interest rates too.
Yeah, it sure could. That low yesterday, that might be support for the short run. You won't know just yet because we got to make a higher high in here from a technical standpoint to kind of tell us that this low is going to be maintained. But I drew that line in from the recent price action. The 200-day is flattening out a little bit on this retreat. But, if you're looking from a trend trade standpoint, Brent, I think one of the things that traders are probably monitoring here is this line right about there, acting as potential resistance. And even though you might like the opportunity to be a buyer near support, you're not going to feel good about it until you can break the downtrend line, and then you want to make a higher high. You want to take out a high that was achieved. So somewhere above 252 might be something like that. But a lot of traders, Brent, get started on a close over the downtrend line first, don't they?
Yes. And so for a lot of traders, they look for trends. And a trend isn't made in a day or two or a week even. You may want to see that nice strong move in a week, but it takes the time to develop higher highs and higher lows. And so that would necessitate probably 2-3 weeks of time or something like that for that to truly develop. Now you can get a breakout in a day, that certainly happens, but that breakout is not a trend.
Yeah, not a true trend, at least not as of yet. So Brent, another one here, a group that's been working, and we should highlight this quickly. Let's just look at where the financials are collectively, and then I'm going to bring one up. So this chart is kind of notable, Brent, because that 20-day moving average is speedily moving upward with price action. Prices in the last week have tested the 20-day, so a nice improvement here. And if you looked at the highs we've achieved of late, it kind of resembles that ascending triangle we've seen in the SPX. Now I'm going to bring in a security in the same space here. Bank of America upgrading Capital One today to buy from neutral. And Brent, the pattern here looks a little bit similar. It kind of stands out, doesn't it?
It is. And, you can see overall for the chart, we've had a pretty strong move, really positive, but kind of a consolidation here. And the question is, when are we going to break, or if we are going to break the high level? And we'll see on that. But that's the kind of, when we talk about a consolidation, that's what we like to see, is something where we kind of go sideways, but don't like completely break down. And that is what we've seen. So this is poised for traders who are looking for an entry. Some traders would consider that as kind of a key level, the white line that Kevin drew. As if you break above that, that is kind of clear sailing, so to speak. Doesn't mean it can't, turn around in a sec, but
Right.
but that's what the type of thing that traders look for.
And if we pull this back on the weekly, Brent, it's been a very long range of an improving chart here. Most notably was this extended candle to the upside on the weekly chart that took out prior highs. And then we did a little bit of a bull flag situation where we came back and tested that level before breaking again. So you've had some consistency in the trend. Here at this point, some traders are just going to sit on their hands so they close over those recent highs. Again, I gave you the update in terms of the action there to buy from neutral. New target is 235, up from 207. At Bank of America, they think that that Capital One is well positioned after their pending acquisition, of Discover Financial, ticker there on Discover DFS. So there you are, everybody. We're going to wrap it there. Busy day today, as always. Brent, love having you on a Wednesday. Thanks for being here, buddy. And big thanks to Cam in the chat. Big thanks to all of you for joining and participating. It was a lively chat, to say the least, today, everybody, but we're glad you all made it. Please be sure to follow the three of us on X. Hit that thumbs up button for us down below. We'd appreciate that as well. And make sure you're subscribed to the Schwab YouTube coaching channel, everybody. We appreciate you joining. Have a fantastic Wednesday. We'll see you again real soon.